Hey everyone, welcome back to GST Park. So, we are discussing about the part 3, that is ITC chapter. We are revising section number 18, the ITC in statutory provisions which is related to some special circumstances. ITC statutory provisions which are related to some special circumstances here. Yes, section number 18 subsection 1 clause A, which says that, just to recall, which says that if you are liable for registration within 30 days, if you take the registration, if you are liable for registration and within 30 days from the date of becoming liable, if you take the registration, then your registration is valued, or if your registration will be valid from the date of, effective date will be the from the date of becoming liable. So that one day before the date of registration, one day before the date of becoming liable, whatever which is there in your stock, input goods, semi-finished goods, finished goods, input goods, semi-finished goods, finished goods, on that you will get the ITC. You can avail the ITC on that. Why? Because tomorrow onwards, that means from the date of becoming liable, next day onwards you will be liable to collect the GST and we will pay to the government. But you have already paid some amount as GST to the government, so that government says that you can take ITC. Again, the day when you become liable, no, within 30 days if you apply, then your registration certificate shall be valid from the date of becoming liable, so that one day prior to the date of becoming liable, whatever there is which is there in your godown in the form of input goods, input goods, the semi-finished goods and finished goods, on these three items you will get the ITC. But the thing is, on capital goods you will not get the ITC. On capital goods you will not get the ITC. So this is about section number 18 subsection 1 clause A. Section number 18 subsection 1 clause B, which says that if you are voluntarily taking the registration, then the date of applying for the registration, later you will get the registration certificate, grant of registration certificate. You are liable from the grant of registration certificate, so that the one day prior to the date of grant of registration certificate, whatever which is there in your godown in the form of input goods, semi-finished goods and finished goods, on these three items you will get the ITC, but not on capital goods. Remember, not on capital goods. So this is the ITC you will get. Why? Because the next day onwards, from the date of grant of registration, next day onwards you have to collect the GST, so that you have to collect and pay to the government. The government says that whatever you are collecting, no, and whatever you have paid for purchase of that, you will get the ITC. This is given in section number 18(1)(b). Section number 18(1)(c) says that in case earlier you were under composition, now on the date from today you became liable under section number 9 subsection 1. If you are liable under section number 9 subsection 1, then you have to collect and pay to the government. Earlier you are not liable for you are not getting ITC. So that the goods which are already there in your godown one day prior to the date of becoming liable under section 9, so the goods which are there in your godown one day prior to the date of becoming liable under section 9, then one day prior, no, whatever the goods which are there in your godown in the form of input goods, semi-finished goods, finished goods and capital goods. The capital goods, maybe you will get the ITC. So you will get the ITC. Remember, in case of capital goods, the how much ITC we will get, sir? From the date of invoice of that capital goods till the date of becoming liable. How many quarters are there? Per quarter 5% you have to reduce from that ITC. 5% of the ITC you have to reduce. How much ITC is there? No, on the remaining ITC you will get the ITC, given in section number 18 subsection 1 clause C. Section number 18 subsection 1 clause D, it is about earlier the goods were exempt. Now the goods became liable. The date of becoming liable, that is the date of notification of liability, from that date the goods are liable. Under section 17 subsection 2, section number 17 subsection 2, we discussed that the registered person will get the ITC on those goods which are used for taxable and zero rated supplies, but you don't get the ITC on those goods which are used for exempt supplies. On that basis, I have not taken the ITC on those goods which are exclusively used for exempt supplies. So but now, the today onwards, example, from the date of notification, the goods became taxable, sir. So that anything which I have already purchased for using it for taxable supplies, now it became taxable supplies. Earlier, whatever I purchased for making the exempt supplies, that was not available as ITC. That's why I have not availed the ITC. But today onwards it is liable, no, liable for tax. For that purpose, anything which is there in my godown which is exclusively used for exempt supplies now became taxable supplies, on that I can take ITC, including capital goods, sir. Yes, including capital goods, but provided in case of capital goods, will I get 100% ITC? No, I have to reduce 5% per quarter or part thereof. So I have to reduce, and whatever the ITC remaining, no, on that I can take ITC. This is about section number 18 subsection 1 clause D. So we are done with section number 18 subsection 1 clause D, but remember, so in section number 18 1A, B, C, D, I will get the ITC on input goods held in stock, semi-finished goods and finished goods, provided I should have the invoice. For all these goods, no, I should have the invoice. Number 2, important one is that age of that invoice must not be more than 1 year. That means 1 year should not have been expired from the date of invoice. From the date of invoice, 1 year shouldn't have been expired. In that case, I will get the ITC given in section number 18 subsection 2. I hope this makes sense. Yes, no. Section number 18 subsection 3 says that where there is change in the constitution of the business, that means your business is changing from proprietorship to the partnership, or from partnership to the company, from company to the partnership or proprietorship. In that case, your PAN is changing, so that you have to take the new registration. When you take the new registration, no, when you take the new registration, from this registration you have to transfer the ITC to the new registration. To transfer the ITC, you have to file ITC 02. Sir, in case of section number 18 subsection 1, I was getting ITC, no, which form I have to file, sir? ITC 01. In this case, sir, ITC 02. Even in case of merger, even though new registration is not formed, so in case of merger, for example, A company and B company will merge with the A company, sir. That old company may some goods were there, no, that has been transferred to the new company, so that the ITC which was available in this GST number has to be transferred to this company. For that, we have to file GST ITC 02 given in section number 18 subsection 3, read with relevant rules. So later there is one more point, sir. Under one PAN I had example 3 branches. Under one PAN 3 branches. For all the 3 branches I had one registration, sir, one registration number. But now I feel that I want to make one separate registration for this one branch. 2 branch case ke liye one registration, and 1 branch one registration. I want to do that, sir. In that case, the earlier whatever the goods which are transferred to the new branch, no, the ITC was there in the old branch, sir. Now what I have to do, what I want to do, sir, I want to transfer the ITC related to the goods which is there in this branch to their branch. How to transfer, sir? This is in case of same PAN, one registration number was there. Now new registration number has come in the same PAN. In that case, I have to file GST ITC 02A. I have to file GST ITC 02A for transferring the ITC from this branch to the that branch. That is given in section number 18 subsection 3. Sir, section number 18 subsection 4 is about from regular scheme to composition scheme. See, section number 18 subsection 1 clause C was about normal, composition to normal, but here normal to composition. So I want to go back from normal to composition, sir. That means tomorrow onwards, whenever I withdraw the option or I go for composition, in that case tomorrow onwards I will not get the ITC. There I was getting the ITC, here I will not get the ITC. Government says that if you don't want the ITC, please do reverse the ITC to the government. You have to reverse the ITC to the government. Sir, what is the amount that I have to reverse, sir? What is the amount that I have to reverse? That is nothing but the ITC which you have availed on input goods, semi-finished goods, finished goods, whatever ITC you have availed, that you have to reverse. In case of capital goods, reduced by such percentage points, but section number 18 subsection 4 read with relevant rule says that you have to go for month rule. You have to go for month rule. Remember, section number 18 subsection 4 and section number 29 subsection 5 ke liye you have to use month rule, month ka rule you have to use, and so that is given in section number 18 subsection 4. This is 18 subsection 4. Next, after paying that, how to pay that, sir? You pay that by what you pay it by electronic cash ledger or credit ledger, by debiting electronic cash ledger or credit ledger. That is what the point is. Uske baad after that we even after paying that, some amount is there in credit ledger or cash ledger, sir. What will happen? Sorry, not cash ledger, credit ledger. Even after paying that, some balance which is laying in the credit ledger shall lapse. Even if after paying that some credit is there in your ledger, sir, that shall lapse. Next one, section number 18 subsection 5 says that as per 18.1 and 18.4, in 18.1 you are getting ITC, in 18.4 you are reversing the ITC. So in that case, how to do that, sir? As per the relevant rules as may be prescribed. Section number 18 subsection 6 says that in case you are selling the capital goods or you are selling the machinery on which you have taken the ITC, then you have to reverse the ITC. Sir, how much I have to reverse, sir? It is percentage point as may be prescribed or the transaction value, GST on transaction value, whichever is higher. That is given in the act, but rule says that you have to use you can go for any of the method. You can go for percentage or you can go for 60-month rule, but I say that my personal suggestion is you have to go for 60-month rule. 60-month ka rule, so that you have to apply as per 60-month rule or transaction value. As per section number 15, for selling the machinery you have collected some GST, no? The GST that you have collected or GST that you will the ITC that you will reverse, whichever is higher, that will be taken. That is considered here also. That is what given, whichever is higher. So this is even after paying, sir, some amount remains, so that will be lapse. And one more, provided that in case of refractory bricks, molds, dies, jigs and jars, you don't have to go for this method. Directly pay the whatever you receive under transaction value under section 15, no, that you have to pay it to the government. Don't apply section number 18 subsection 6, that is not required. Directly go for transaction value. It is given. Uske baad we discussed about some of the rules here. So what are the rules, sir? In that, the first we will discuss about the rule 40. Rule number 40, it is about manner of claiming credit. Claiming credit, not reversing the credit. That means it is applicable for section number 18 subsection 1. Claiming as well as reversing the credit is also there. We will discuss about that. Section number 18 subsection 1 mein clause A, B, C, D. In that case, you will get the ITC. You can claim the ITC, no? In the section number 18 subsection 1 mein A, B, C, D mein you can claim the ITC. How to claim the ITC, that has been given here. But remember, A, B, C, D mein you will get ITC for everything, but C and D mein, I mean A and B mein, section number 18 subsection 1 A and B mein you will get ITC, you will not get ITC for capital goods. C and D mein you will get the ITC as well. So section rule number 40 sub rule 1 clause A says that in case of C and D you will get the ITC on capital goods as well, but after reducing the 5 percentage points per quarter, you have to reduce it. And later 18.1b says that, so this you have to file this. Once you become liable under 18.1, you get the ITC, no? To claim the ITC, once you become liable under normal registration, you have to claim it. When you can claim, within 30 days you have to apply. So within 30 days you have to file one declaration in form ITC 01. Did I tell you about this? Yes, form ITC 01, it says that in form ITC 01 you have to claim the ITC, provided that any extension can be given by the commissioner, that will be considered as state commissioner is giving some extension, that will be considered as given by the commissioner, actual commissioner, that is given here. Yes, sir. Uske baad point C, rule number 40 sub rule 1, correct? No, rule number 40 sub rule 1 C says that, sir, on which goods I will get ITC? Remember, on 18.1a, which says that 1 day prior to the date of becoming liable, 1 day immediately preceding the date of becoming liable. Rule number 40 sub rule 1 C point number 2 says that as per section number 18 subsection 1 clause B के हिसाब से, if you are voluntarily getting the registration 1 day prior to the date of grant of registration certificate. 18.1c के हिसाब से, if you are opting from composition to normal 1 day prior to the date of becoming liable under 9, from 10 you are becoming 9, 1 day prior to the date of becoming liable under 9, any goods which are there in your godown, on that you will get the ITC, even including capital goods. Next, the fourth point says that if you are liable, if you become liable under registration, I mean not registration, if you are liable, that means your goods earlier it was exempt, now it has become taxable. The day when you got the notification, no, one day prior to that, whatever the goods which were there in your godown, on that, including capital goods, on that you will get the ITC. Becomes taxable. One day prior to that you will get ITC. Remember, if you want the ITC and the ITC claim is more than prescribed limit, that is 2 lakh rupees. If it is more than 2 lakh, then you require a declaration that should be signed, duly very certified by a chartered accountant, that is required. That and one more thing, in case of 18(1)(c) and 18(1)(d), you will get the capital goods pay, you will get the ITC on capital goods, and even on the goods which are mentioned, that is input, semi-finished goods, finished goods. On all these goods you will get the ITC, no? Government says yes, you will get the ITC. And one more thing, the government, the portal will check this with your supplier, because see, in 18(1)(c) and 18(1)(d), earlier also you are registered, correct? No, in 18(1)(c), earlier you were composition registered. In case of composition registered, you remember in return chapter we have discussed that there is something called as 4A, GSTR 4A. What is that 4A, sir? Whatever sold to a composition dealer, composition is also registered person, no? So that composition dealer also has one 15-digit ka composition ka one, this is applicable, no? GST number that he has, whenever supplier, registered person is supplying to the composition dealer, he will put that in GSTR 1. That can be determined, that can be seen here. And one more thing, that compared, if I take more ITC, then government will ask the question, why you are taking more ITC? Because GSTR 1 which is filed by your supplier is less, but you are taking more ITC, why? That question. In case of section number 18(1)(d) also, earlier he was registered, but some of the goods were exempt, some of the goods were exempt, but that exempt became taxable now. Even though I am exempt supplier, that exempt supplies, but I was registered person, no? I was registered person. You have seen that section number 22 subsection 1. At the same time, section number 23, you are not liable to take the registration if you are, as per section number 23 subsection 1 clause A, you are not liable for registration only if you are not liable for registration only if you are exclusive supplier of exempt goods, no? So here this 18(1) says that, 18(1)(d) says that you are supplier of both exempt as well as taxable. Earlier you are supplier of both exempt as well as taxable. Earlier what was exempt, no, that became taxable now. That became taxable. That means earlier you were registered person, so that if you are registered person, whenever you are purchasing something, no, you will give your registration number to that person. That person will file GSTR 1 by putting your GST registration number, so that in your 2A, that ITC is available, but you cannot avail it. You cannot avail that ITC. But now government, when you are taking ITC, no, government will check this, whether actually it is purchased by this person or not, whether the ITC has been availed, or the GST which is paid by this person is given by GSTR 1 of that registered person or not, supplier or not. That will be matched. That will be matched with in GSTR 4 and GSTR 1. That is about rule number 40 sub rule 1. Rule number 40 sub rule 2 says that in case of capital goods, whenever you are transferring from, so in case of capital goods, as per section number 18 subsection 6, if you are selling the capital goods, then you have to reduce the percentage 5 percentage points as may be prescribed. It is given in section number 40 subsection, rule number 40 sub rule 2. But note mein you can see one note here. If you can recall that, when you have studied that, you can see a note here. I am just going to show you that note. See the note. The note says that for rule number 44 sub rule 6, ITC involved in remaining useful life of the capital goods is reversed on pro rata basis, taking the useful life as 5 years. See rule number 44(6) ke liye. What is rule number 44(6), sir? Rule number 44(6) is for section number 18 subsection 6. So note says that 5 month rule, month ka rule, so that even if rule number 40 says that, actually there is option, you can go for rule number 40 or 40 sub rule 2, or you can go for rule number 44 sub rule 6, but I suggest that go for month, that is month rule, not quarter rule. Okay, and that depends on your ICA also, what they are taking. Okay sir, so that was about rule number 40. After that, rule number 41 में transfer of credit on sale, merger, amalgamation, lease, but we have already discussed ITC 02 has to be filed. ITC 02 has to be filed by that person. So to transfer the ITC from one person to another person, provided that in case of demerger may you remember that on what basis you have to transfer the ITC, on the proportionate ratio of value of the asset, on the basis of asset you have to transfer. And one more explanation is given for this purpose. What is the meaning of value of the asset? Whether you have taken ITC or not, eligible or not eligible, complete entire asset which is going, no, balance sheet ka entire asset, the bunch of asset which is going, no, on that basis you have to transfer. And there is sufficient arrangement should be there for liabilities also, for transfer of liabilities also, that is also given. Next, rule number 41 sub rule 2, transfer also submit the certificate issued by the chartered accountant, CA or CS, correct? No, practice in chartered accountant, not CS, cost accountant, I am so sorry. And that form GST ITC 02 has to be filed, and inputs and capital goods so transferred shall be duly. See, he has to, first of all, he has to accept. Whenever I transfer to another person, in his GST number he has to log in and he has to accept. And here once that person accepts, no, and whatever the goods which are transferred, that should be shown in his balance sheet, books of accounts, that he has to show. Later, rule number 41A, transfer of credit on obtaining separate registration. Did we discuss about ITC 02A? Everything is same, only form is the different one. See, he has to accept, where it is given, yeah, on the basis of assets, and that person has to accept, plus value of the asset will mean that bunch of the asset which is going there, and form ITC 02A. So newly registered person has to accept that. That's what I told. He has to accept. Rule number 44, manner of reversal of credit under special circumstances. When you will reverse, sir, under section 18 subsection 4 you have to reverse, correct? No, 18 subsection 4 may you have to reverse. Why? Because from regular you are going to composition. At the same time, 18 subsection 6 maybe you have to reverse. See, in case of 18 subsection 4 may you are going from regular to composition, so you have to reverse on input, held in, input stock, all these things including capital goods may. So you have to reverse 5% life. See, you have to take useful life as 5 years. I told you in both the cases you have to take, sorry, in capital goods may you have to take useful life as 5 years, and the amount specified in rule 1 shall be determined separately, IGST separately, CGST separately, SGST separately. And next, sub rule 3 says that where the tax invoice related to the input tax are not available. See, usually I told you, on the basis of invoices you have to reverse the ITC. Remember that section number 18 subsection 1 may you are getting the ITC, and they say that there are two conditions to get the ITC. Remember, I am talking about 18 subsection 1. Section number 18 subsection 1 may you will get the ITC. Hello, you will get the ITC in section number 18 subsection 1. So on the basis of invoice, if the invoice age is more than 2 years, first condition, if the invoice is more than 2 years, no ITC, gone, tata, bye bye, goodbye, gaya. The second one, you will get the ITC. Second condition is that you will get the ITC only if you have the invoice. If you don't have the invoice, you don't get ITC. Okay, first condition is you should have the invoice, only then you will get ITC. Otherwise, you will not get ITC. Sir, what if I don't have the invoice? No, you will not get the ITC. If you don't have the invoice, you will not get ITC. Second one, even if you have the invoice, the age of invoice should not be more than 1 year. Then you will get the ITC. So, sir, if there is no invoice, then I don't get ITC? No, I am so sorry. Government says, pardon, I will not give you the ITC. But in case of section number 18.4, sir, in case of invoices, so there also I should have the invoice. On the proportionate basis, I have to reverse the ITC. Sir, if I don't have the invoice now, the government says that if you don't have the invoice now, Don't worry, if invoice is not available, we will take the market value. It is government, ITC reversal, no? See, 18.1 May, you were getting ITC. Government says, no, I will not give you ITC because it is your irresponsibility. You had to maintain invoices. You are not having invoice, what to do? I cannot give you ITC. But next point may government says that in case of 18.4, I don't have invoice. Government, what you do? Government says that, see, I want my ITC. I am so sorry. You have to reverse the ITC. I want tax. So that you don't have invoice, it is your irresponsibility. I will take market value, finish. Estimating the amount under sub-rule 1 based on prevailing market price. So this is as simple as that. And how to reverse the ITC, sir? By ITC 03. You have to file ITC 03 and you have to reverse. The details furnished in accordance with rule 3 shall duly certify the practicing chartered accountant. So there should be a CA or CMA. So these two guys, no, they have to, either one amongst them, they have to certify, and amount of input tax which is there in capital goods for 18C, no, 18.6 relating to the capital goods shall be determined in the manner as may be given in B of sub-rule 1. See sub-rule 1B. What is sub-rule 1B? See, this is sub-rule 1 and B here. What is B? Useful life, 60 months. You have to use the rule, 60 month ka rule. Yes, yes sir. And finally, that is about section number 18 subsection 1. So we are done with section number 18 subsection 1 with rule 40, 41 and 44. 40, 41, 44. These are the rules. 41A is also there. 40, 41, 41A and the rules. This is about section number 18. So people, I believe that this revisional series are helping you. Based on that, I believe you are studying well. You are studying well. I told you that I am selfish. I want 50 marks from your side. This is the biggest gift that you can give to me. So I am expecting some gift, people. Thank you so much. Love you all. Missing you. Bye bye. We will meet in next revisional video. Until then, keep studying, keep growing. Hail GST. Jai Shri Ram.